Follow-up stream. So last week I was talking about bank earnings. I was talking about Goldman Sachs and Bank of America as they were reporting today. So my original plan was to make a play on Bank of America, but I ended up going with Goldman Sachs because it ended up having a better pattern. It was the one that actually did worse. Bank of America seemed to do a little bit better because Goldman Sachs was pulling people down. However, if we look at Bank of America here, we can see that it's kind of giving you the pattern that I was originally hoping for. I actually did make a trade on Bank of America. I ended up buying one long leap on it just because I wanted to see what would happen. It really wasn't that expensive. The options for Bank of America are not that expensive. Yeah, right here, this is the one that I ended up buying. It's only I got it for like 119, so it's gone up a couple bucks, but that doesn't mean anything yet. It's because we've had this little green pump here. I bought it somewhere in this mess. This is about the time we're sitting somewhere around 8:30 right now, and that's when I would normally want to come out and look at a reversal for the day when things are either not going as planned or when the market just looks like it's going to have a reversal. Over here on the left hand side of the screen I have the SPY, and this line right here is VWAP, and as you can see it came all the way down to VWAP, and that's where it bounced. And up here, this is actually my high volume area, so it came up to the high volume area, bounced down, hit the VWAP area, and is starting to bounce back up. Now, it's still early in the day, so there's still plenty of trading time left. Things could change on a dime, but the fact that it hit these two levels is just kind of interesting to me. This is a longer-term VWAP. The reason I have this one on a longer timeline is because I want to make sure that I see the full range of the VWAP instead of just the quick range, like the daily range. I want to see a heavier area of volume. So what I did this morning, let's go back to Goldman Sachs. I ended up selling some puts, actually I only sold one put spread on Goldman Sachs. It's a $5 wide spread, so a $500 max risk. I received not as much credit as I would like. It's only about 130. You want about a third of the width of the strikes. So if it's a $5 credit spread, then you're going to want to get about 160 something dollars, somewhere around there. You're not always going to get that. Ideally, I'd like to get around 180 because a lot of the times if I can get about 180 bucks for a $5 wide credit spread, that's usually about where I feel the safest, because it's not so much that I think like, all right, this isn't going to work. If you get way more credit than you're supposed to, it usually means that trade's not going to work out. So it's not that high up, but it's high up enough to where the premium's inflated and I'm receiving a decent amount of my risk as protection. So today I ended up going with the 325, 320 strikes because we're up here at 333. I went out into May to get that. So I didn't really have to go that far actually, which is nice. So the credit will come down a little bit. I like to have some time. I don't like to do it the next week or the same week or anything like that, because just in case things don't move the way you think they're going to, I want to have a little bit of time to be able to adjust. And that's not a lot of time to adjust, but it's enough to where if I get a few days of movement in my favor, that should be enough to collect some credit and get out. And that's what I'm trying to do. If you wanted to, if you're really good, you could sold it right at the beginning of the day. I mean, because this was actually looking like it was forming a bottom right here. You could have sold it at the beginning of the day and then taken it off by the time it came up here, or even taken it off by the time you went to VWAP. Now, if you're selling options for that, you're not going to make quite as much money making a quick day trade. Normally, if you want to make a day trade, you want to use shares or long options or something like that, because that way you're actually going to make the money on it. But the move that you're going to get is not going to be as good for selling options premium, because it's just not going to drop that much. It's usually not going to be enough for a day trade. For me, that's something I want to hold on to for a few days or a couple of weeks until I can make enough on that to get out of it. If I can make somewhere around 40-50% of the credit, that's good enough for me. And if it's a really secure position, then I'll hold it a little bit longer than that. But if I'm somewhere in the middle on how I feel about it, then I definitely want to get out at like 40-50% credit, just because I don't want to take the extra risk. So that's what I ended up doing this morning. We'll see if that ends up working out, because this is what I was sort of hoping for. Didn't go exactly the way I thought, but it was basically what I was hoping for. I wanted them to come in. I wanted them to have some kind of an issue that brings them down, and then catch a little bit of that bounce, or maybe flat action if it stays flat. Like if it goes like this for the next couple of days, that would make me happy. I like when that happens. If it just keeps going up, that's great. That's going to work in my favor. But when you see a drop like this, that's not usually how it goes. So down here we have a longer term timeline. We can see that it was kind of trending up a little bit, and then it came down to the longer term VWAP, and that's where it bounced. So you can see that's one reason for it to bounce down there, is the longer term VWAP had some support in that area. Also, it's Goldman Sachs, so they know that it's not going to be terrible. Let's pull up some of the news and see what we had here. Goldman Sachs, they bought back some shares, so that's somewhat bullish right there. See, EPS came in at 8.79 versus 1076 a year ago, but it did beat the FactSet consensus of 814. So it's under what it was a year ago, but this was still above the estimates, which is nice. So that's probably why it didn't drop so much more. That's one of the reasons. This is a bank, and banks have tons of reasons to go up or down. So that's just one of the main ones. Like EPS will play a huge factor in most companies, like a retail company or something like that. But with banks, there's so much more going on. You have to pay attention to what's going on with their books. So what else did we see? So yeah, they're saying total revenues are down a little bit. So that was one of the bearish things that came in right there. Let's see. Platform Solutions revenue increased 144% year over year. So that's bullish. They said they're dropping their head count. So that's going to be bullish for the stock, not necessarily for the world or whatever, but for the stock, that's bullish. And here's some news about Bank of America. Bank of America beats profit mark and sees record inflows of $37 billion. So that was one of the reasons why I actually bought a call on Bank of America, because it was still struggling down there a little bit. The premium isn't high, so it's not a huge risk, and it's also not going to be a huge reward either, because unless we get a big move in Bank of America, it's really not going to be all that much. But I wanted to give it a shot because of the fact that they came in somewhat bullish. And see, this is what I'm saying with Goldman Sachs. It didn't come in that bad. I mean, there are problems, but nothing so crazy that you think the thing's going down to the 200s. It's going to stay in the 300 range most likely, unless we have some other kind of systemic thing or some market thing. Because now we have to see if the market's going to be on our side. I mean, that's what I'm looking for now. It's just making sure the market confirms. Right now, we've got some Fed presidents talking. We've got the White House economist Bernstein talking. They're talking about the debt ceiling again, which they do like every day. Like, they're not going to raise it. You know, like, come on, dude. They're going to raise it. That's what they do with these things. It's like, we're going to do it this time. No, they're not going to default. Everybody's livelihood depends on that. They're going to raise the debt ceiling. People that think that it's not going to happen are dumb. It's going to happen. They're going to do it. That's happened every single time in the history of the country that this has ever gone on. They're going to do it again. They're going to argue about it. They're definitely going to try to leverage it to their own advantage. Like, both parties are going to try to get what they want, of course. At the end of the day, they're going to raise the debt ceiling. It's just what happens. So, so there's some news, and when economists are talking, when the Fed's talking, that'll cause some volatility in the market. But we had these pumps, so we had a little bit of a dump right there. We had some people coming in with earnings. We weren't sure about Goldman Sachs as a big bank. Bank of America is a big bank. Those were important stocks. We also had Johnson & Johnson and Lockheed Martin, LMT. See, they pumped out. They did pretty well. I didn't even look at why, but it's a defense contractor. We've got wars going on, so I can surmise. You know, it's probably that. It's probably like Ukraine and stuff. There's another aid package to whatever country. Here we go. Here's some tanks and stuff. Bam. They made money. So they did well. They're pumping right now. Then Johnson & Johnson, they came in. They didn't do as well. In fact, I didn't really look at this one either. So what do we got? Swings loss. It looks at multi-billion-dollar charge to settle talc claims. Oh, the talcum powder thing is still hitting them. Man, that was a few years ago. I didn't realize they were still dealing with that. So this is a stock I don't trade. It just has so many facets that I don't even want to deal with it. See, that's my thing. I don't want a stock that's so complicated I have to go to school to figure everything out. It's like I'm barely okay trading bank stocks, and even then I don't really know as much as I should. But something like Johnson & Johnson that has all these different industries, I'm not even going to mess with this, but I'll look at it just to see what's going on and see if I can get any insight into anything else. Ericsson at $5. I mean, is Ericsson a $5 stock still? It was years ago. What do you? It's still $5. Look at that, it was up. Oh, it's been so long I haven't paid attention to it. See, what I found, it was like back here is like $5. It was kind of trading around this range. Oh, look, it went up to 7 or 8. Big deal. I just didn't pay attention. And then 2021, it pumped like crazy, like everything else, and then it's been on the decline. But look at that, it's a $5 stock again. I haven't looked at it in years, and it's even if you were in this and you were experiencing all the ups, like you're right back where you were a few years ago. So good job on that one. All right, so let's go back to Bank of America real quick. Bank of America shares trading higher after the company reported better than expected Q1 results, including a 25% increase in net interest income. So there you go, right there. Interest. That's the whole thing. Rates go up, banks make more money. Boom. That's exactly why I expected banks to do well. Now, this is interesting, though. The fact that it's coming down, and it's pumping right here because the numbers came out, and now there's some other stuff that's going on. The market's kind of pulling it down. And that was the other reason why I ended up buying a call on it, because we had this nice pump and dump right here. Bank of America did well enough, and I think they should be able to hopefully come, if the market comes back, that is, they should be able to come back a little bit. So my thought on that leap isn't to hold it for all that long. It's just to hold it for a little bit, see if the trend of the market kind of brings us back to an area where I can make a little bit on there. Like I said, I only bought one option. It was really just a cheap one just to see if I get, that means I'll probably probably only make like 30 or 40 bucks if this thing goes up $1, but that's okay. I really was just trying to catch a little bounce and then do something else. And if it doesn't bounce, if it goes down, it's a leap. So it's not going to drop all that much. And it's Bank of America. So the stock is already at the low of its range. If it goes from here to the absolute, well, I don't know about the absolute low, but the recent absolute low in the 20s, anywhere in the 20s, the mid 20s, low 20s, that's not terrible for me. I mean, I'll take that hit and just keep going. So that's what I was doing this morning. Sold a put spread on Goldman Sachs, bought one call on Bank of America, and then I was looking at some of my other trades. Beyond Meat, I have a cash covered put. So I sold a cash covered put in Beyond Meat a while ago, and it's just been sitting in this $14 range ever since. Every day the contract's just losing a few bucks, which is what I'm looking for. So that one's been pretty good. Also TVT, the ProShares Ultra Short 20-year plus bond trust. I sold some puts in that a while ago, a couple weeks ago, somewhere in here, I think, and it just pumped, and those contracts were worthless, basically. I think I bought them back I should have bought them back for $7, but I ended up buying them back for 10 because it was a spread, and for whatever reason, the spreads don't fill right away. You know what? You can put the max credit in, and you can put above the max credit in, and this thing will still take forever to close. It's annoying. I really hate that. It's like, all right, I get it. You know, the computer's got to do more complicated stuff by closing multiple contracts with one order. If you're at the max credit, those things should fill instantaneously. I don't get what the deal is with that, but I just wanted to get out. I mean, I sold them for $34 a pop, which is like exactly about a third, right? To me, that's what I call exactly, since you can't really get a 33.333 contract, just like I'll call it 34. So if I sell it for $34, then I'm buying it back for 10. That's a nice little profit. So every one of those contracts just drained right out. So I got out of that one. That was my other trade. And then Roblox. So this is an interesting one. I don't actually know a whole lot about Roblox. It's just a stock I've been following because it's popular and it's got that whole metaverse kind of thing to it. But yesterday, this thing tanked on some kind of meh news. Oh yeah, their metrics. All right, so they released their metrics. Their metrics weren't terrible, but they said that they weren't going to release metrics anymore. So that makes people scared. They think, oh, are they doing that because they don't expect it to be good in the future? Well, maybe, or maybe it's expensive to do this every month because they're not just releasing quarterly, they're releasing monthly. And they've only been listed for like 2 years, I think. And they've reported those metrics every single month since then. And they basically said, well, we don't want to do that anymore because we think we've told you enough and we've shown you a snapshot of the business, which, like, fair enough, because it's expensive. You have to pay people to do that stuff, which is why companies would love to have to do it less. You know, like there are some companies that want to do it once a year or twice a year at the most. They don't even want to have to do it quarterly. But I think quarterly is important because that gives you at least some, because if you're waiting 6 months to know how a business is doing, that's hard to evaluate in that time. I mean, so much can change in that. Even 3 months is a lot. But at the same time, if you make them do it too much, then costs are just going to go up because they're going to have to pay people to do that. They said they don't want to do it anymore. The news to me was just kind of as far as that big of a drop on it. I mean, where did it go? It was up here at 46. It dropped down to 40. It's not like insane, but it was a gap down. That's a pretty big move. So some people definitely did not like that. But look at how flat it was when it hit there. I mean, it did this. It had this little dip. I remember seeing this little dip right here and then kind of came back up, and somewhere within this mess where it sort of was coming up and hanging at VWAP, I decided I was going to go for just a quick little put spread on that too. So I got a put spread. As much as I would like to have it be a cash covered put, that didn't really go in this case because it's just, I just don't have the cash to be doing this all the time. Because like a $40 stock, that means you're going to put up $4,000 to sell a put. I mean, that's not bad, but at the same time, it's just, I could do other things with that money. So I put a spread in there, took a little bit more than a third of the width of the strikes. I think I ended up getting about 40% of the credit on that one. So we'll see how that one goes. I only sold one. Just want to see how it goes. Kind of a fun thing. So that's basically what I've been doing. Beyond Meat, this, Goldman Sachs, Bank of America. Oh, my other one, British Petroleum, BP. So that one I've had on for a little bit. After OPEC Plus came out and said that they were going to be cutting production a little bit, and people were trying to convince them not to, and they said, no, we're going to do it anyway. I thought, all right, this is bullish for the price of oil, which also means that it's probably going to be bearish for stocks because as oil goes up, stocks go down. It means costs are going up. So profits are going down. But I ended up selling some puts on that. I actually sold some in the monies. It was hanging out at 39. It came down a little bit, and I thought, all right, this seems like a decent little area because I heard the news. I wanted to get in on that. So I sold a put right in here somewhere on one of these 2 days, and then it's been pumping ever since. To me, that's a nice spot to get in because, yeah, this thing's got very toppy here at 40. At the time, 40 was in the money. So I sold like the 40 put, and I wanted to make sure that I held it long enough to get above 40 so that the premium drains out of it. But I didn't want to take such a huge risk on it. So I only did a $1 wide strike on this one just to make sure that I don't get clobbered by it if something does come down a little bit. I mean, I could have done more. I could have made some more credit, but I mean, getting 40% of the credit of that is not bad. So yeah, that's my other trade. I'm just kind of sitting on that one. This one I'm holding a little bit longer because I'm expecting the price to trickle up over time. I mean, it might come down depending upon what the market does, but if the market pumps, this thing will probably follow it a little bit, and it's just enough to where I'm going to drain some premium out and then call it a day. This one I probably could hold a little bit longer, but I'm starting to fill up on positions. See, that's the downside of selling options. Like last year when I was buying options, I had all these trades going on because it's not capital intensive to hold a bunch of long options. But when you're holding short options, you have to hold the risk aside for like Beyond Meat, right? So I sold like the 1250 put. So that means $1,250 has to sit aside until I make that trade go away. And every single one of those is going to do the same thing. So if you're selling options, you have that capital, it's going to be set aside, so you're not going to be able to do as much. But that's what I was doing today. I just wanted to come on here and take a look at everything and talk about the trades that I'm making. We'll see how these go. I don't plan on holding these all that long, but Goldman Sachs is one that typically likes to do this. It doesn't hit the ground and go down even more. It usually bounces pretty quickly, which is why I ended up getting in when I did, because I thought this one probably will continue to go for a little bit, or at least it'll stay up towards the high end of a range. And it might be running into something below. Like I'm looking at this spot right here, this 339, 340 level as being somewhat of a top when it does come back up. And if you look at it, that's actually about where it was before it came down. But I was just looking at these reversal points where this area right here, this 340 area is a pretty big reversal point. I mean, we have all these instances of it hitting it and going back down. This one got over it a little bit and came back down. This one definitely went up for a little while, but as it came back down, this was the area to beat. And now we're back in this little zone. So I'm going to hold that. If it ends up going up to that level, I'll probably be able to close that trade relatively easily. Hopefully that's what will happen. So I'm hoping for a nice mild couple of days in the market that allow this trend to continue. Let's go to the SPY real quick and see what we're looking at. Even though we've had all these down days, it's still been trending up. And consistently, these two lines that I put in, these high volume areas, have been very consistent. We bounce off this one, we come down, we go up to this one again. And that's the other reason why I don't want to hold this too long, because we're chilling up at this level, which means that there's a good chance we'll have a reversal of some kind. If some bad news comes in, then we'll have the nice little reversal that'll dump us back down. But usually we hit it and then we kind of hang there for a while because the optimists think we might get above it, so they want to wait a little bit. And that's fine because I'm going to let that premium drain. But as soon as I get a chance to dump out of these things, I'm going to do it, just because we're sitting up so close to this range that I can see things coming back pretty quickly. And today we're well below VWAP, so this is obviously not that good of a day. We're above the long-term VWAP, but we're below the daily VWAP. And you can see, like, why is it hitting that area right there? Well, I mean, look at that. That's VWAP. That's also an area where it was having trouble getting above yesterday. So this could be some area of support right there. And if you go back throughout the days, I mean, this spot, you can see it bounced off there a few days ago, went up above it and was just sitting on top of it, came below it and did it again. We've got some short-term volume in this area, which is why it's hanging out here for now. But we're getting all this economic chatter going on. So people are probably going to be moving the market a little bit. So that was it. I just wanted to come on and talk about my trades. I'll be watching these. We'll see how these things go. I'm going to talk to you later. Have a good one and stay safe.